Uniswap stands as the foundational pillar and most consequential automated market maker, or AMM protocol, on the Ethereum blockchain. Netho token, UNI, symbolizes the protocol's transition towards decentralization, bestowing upon its community the authority to architect the platform's future trajectory. This journey chronicles Uniswap's evolution from a pioneering decentralized exchange to a formidable force in DeFi governance, transforming its token from a simple voting mechanism into a value-accruing asset. The inception of Uniswap traces back to 2018, marking a period of explosive beginnings and the eventual genesis of the UNI token. In November of that year, developer Hayden Adams launched the first version of the protocol. Uniswap V1 was a paradigm shift in the world of digital asset trading. It introduced the revolutionary constant product formula, mathematically represented as X multiplied by Y equals K. This model established the concept of liquidity pools, a mechanism that completely obviated the need for traditional order books, which had been the standard for both centralized and early decentralized exchanges. By allowing any user to become a market maker by depositing assets into a pool, V1 laid the groundwork for a more accessible and automated form of on-chain liquidity. The protocol's development accelerated into 2020, a year that would become legendary in the crypto space as DeFi Summer. In May 2020, Uniswap released its V2 upgrade. This was a significant technological leap forward. V2's most critical innovation was enabling direct swaps between any two ERC-20 tokens. Previously, in V1, all trades had to be routed through ETH, which acted as a mandatory intermediary asset. This V1 design created inefficiencies, requiring two separate transactions and incurring double the fees for nanith pairs. By eliminating this ETH routing requirement, V2 drastically enhanced capital efficiency and user experience, which in turn catalyzed an explosion of trading activity and liquidity provision across the Ethereum ecosystem. This enhancement was a primary driver behind the parabolic growth of decentralized finance during the summer of 2020, however. This period of rapid growth also brought fierce competition, the emergence of SushiSwap, a vampire fork of the Uniswap protocol, posed a significant threat by attempting to siphon away its liquidity. In a strategic and now iconic countermove, Uniswap executed a massive airdrop of its newly created governance token, UNI, in September 2020. This event was a watershed moment for DeFi. Any wallet address that had ever interacted with the Uniswap protocol before September 1st, 2020, whether by swapping tokens or providing liquidity, was retroactively rewarded with 400 UNI tokens. This airdrop is widely regarded as one of the most formative in DeFi's history. It not only rewarded the platform's early adopters and loyal users, but more importantly, it was a masterstroke in decentralizing the protocol's ownership and governance, transforming thousands of users into stakeholders overnight, and solidifying Uniswap's position as a community-owned public good. Following the token launch, Uniswap's focus shifted towards technological advancement and performance optimization, a phase spanning from 2021 to 2024. In May 2021, this innovation had profound implications for capital efficiency. By concentrating liquidity where most trading activity occurs, LPs could earn the same amount of fees with a much smaller amount of capital. Uniswap Labs estimated that this could increase capital efficiency by up to 4,000 times compared to V2. Furthermore, for LPs who could accurately predict a narrow trading range, this mechanism offered a way to mitigate impermanent loss, a significant risk in AMM-based liquidity provision. V3 effectively professionalized the act of market making on a DEX, introducing a new layer of strategy and risk management. Concurrently, as the Ethereum network grappled with periods of high congestion and exorbitant gas fees, Uniswap embarked on a strategic multi-chain expansion. To maintain its accessibility and competitive edge, the protocol was deployed across a variety of layered scaling solutions and alternative blockchains. This expansion included prominent networks such as Arbitrum, Optimism, Polygon, and Base, as well as other compatible chains like BNB Chain, Avalanche, and Celo. This strategy not only reduced transaction costs for users, but also cemented Uniswap's role as a cross-chain liquidity hub, tapping into a broader user base and asset ecosystem. Furthering its commitment to innovation, Uniswap introduced Uniswaps in 2023. This new protocol operates as a DEX aggregator, designed to source the best possible prices from various on-chain liquidity venues. Uniswaps brought forth several key benefits. It allows users to execute transactions without paying gas fees directly. Instead, gas costs are covered by specialized third parties known as fillers, who are compensated from the trade's final price. This gasless trading experience significantly lowers the barrier to entry for many users. Critically, Uniswaps also incorporates mechanisms to protect traders from maximal extractable value, or MEF attacks, such as front-running and sandwich attacks, which had become a pervasive issue in the on-chain trading environment. The year 2025 marked the most significant inflection point for the UNI token's economic model, signaling a transformation in its fundamental utility. November 2025, the Uniswap community passed the unification proposal. This was a landmark decision that activated the protocol's fee switch mechanism, a feature that had been built into the protocol's code for years but had remained dormant. The activation of this switch fundamentally re-architected UNI's tokenomics. With the fee switch active, a portion of the protocol's transaction fees, collected from eligible liquidity pools, would now be directed to the governance treasury. The proposals stipulated that these accrued fees would then be used to systematically buy back UNI tokens from the open market and subsequently burn them, permanently removing them from circulation. This mechanism created a direct and tangible link between the operational revenue of the Uniswap protocol and the intrinsic value of the UNI token. It transformed UNI from a token with a singular purpose governance voting into a productive value-accumulating asset. This buyback and burn model introduces a deflationary pressure on the token supply, directly rewarding UNI holders as protocol usage and fee generation increase. The market's reaction to this fundamental shift was immediate and dramatic. News of the successful vote to activate the fee switch caused the price of UNI to surge by over 40% in a single day on November 10, 2025. This price action was a clear signal from a market that now recognized UNI not just as a proxy for governance rights, but as a direct claim on the economic success of the world's largest decentralized exchange. A look at UNI's current tokenomics provides a clear picture of its structure. The total supply is capped at 1 billion UNI, with the initial 4-year vesting schedule for team members, investors, and advisors having concluded in September 2024. Meaning all tokens are now in circulation. The token's primary utility remains protocol governance, empowering holders to vote on critical upgrades, changes to the fee structure, and the allocation of treasury funds. However, following the unification proposal, its utility has been critically expanded to include participation in the protocol's revenue-sharing mechanism. From its genesis as a proof of concept for a new type of exchange, Uniswap has successfully shaped the entire landscape of decentralized trading. With the long-awaited activation of its fee-sharing mechanism, the UNI token has now entered a new era. It has evolved from being merely a vote in a decentralized autonomous organization to being a financial asset that directly reflects the economic performance and cash flows of the underlying platform. Ultimately, Uniswap's journey is a powerful case study in protocol evolution. It represents a remarkable transformation from an innovative but purely technical protocol into a sophisticated, community-governed financial institution capable of generating sustainable real-yield revenue. This maturation from a simple utility token to a value-accruing governance asset positions UNI as a benchmark for how decentralized protocols can create enduring economic value for their stakeholders.